Hi there, Serial Trader here. Just want to do a quick update. Not a whole lot to comment on as it is just one day since I did the last video on the overall markets here, but today's certainly worth noting. Okay, so obviously we can certainly count this as a 5-wave sequence completed, even on a smaller time frame. You can certainly get 5 out of the final 5th wave. Now today we had a nice intraday reversal. We opened up higher, made a marginal new high, and then sold off nicely and then recovered a bit intraday. But before I go to the candlestick chart, just a couple things to point out. So we now are starting to get this bearish MACD cross on the daily chart. We also have a mild bearish divergence after having a false upside breakout. You see right here on this, as it's labeled, very minor degree third wave, RSI on the daily hit 70. And then today we are only at 65, even though we made a new intraday high. And then obviously the MACD moving average, slight bearish divergence. So the MACD moving average was higher over here, even though we had made a slightly higher high in price. We did not make a higher high on those. But I'll go on the hourly time frame because that's where it's most evident. So on the hourly time frame, we had a clear bearish divergence. So as price was grinding higher, the MACD moving averages were certainly not, and they were making lower highs and lower lows all the way. And same with RSI. RSI was making lower highs along the way as price was making higher highs. So you had that nice bearish divergence, certainly more evident on this 1 hour time frame, combined with a false upside breakout. So again, just a marginal new high and then an immediate rejection. Nice sell-off, broke the first support level here, which was at 27.75. Didn't quite get to the second support level, which I would want to see break here yet, which would have been at 27.64.55. And you can see we're bouncing a bit off the lows towards the end of the session. But certainly a nice reversal signature, at least on a short-term basis. Potentially longer term, but we'll look at the candlestick chart because there's some other stuff going on as well. But certainly a pullback of some sort appears to be underway, and it could be a big one. So with that being said, so this is obviously the expanded flat interpretation, and if this is the case, then we're going to be going down hard and taking out the December lows in a strong third wave. And if the other interpretation is the more viable one, then we just completed the initial bull wave up. So 5 waves up for possibly the first wave. And now we're potentially starting that second wave down. And even in that scenario, we need a nice ABC down, proportional one. Even just the 382 retracement would get us down to 26.37. So almost 200 points down from where we made a peak at. And this is in the overall bullish scenario. And just to maximize that, so you can have a glance at it. But either way, between these two scenarios, looks like some weakness is warranted here. Now, I want to go to the candlestick chart. So SPX daily, you have a nice bearish engulfing candlestick. At one point, it looked very bearish, engulfing multiple prior candles. And if it closed below the T line, it would have been more powerful, but it didn't. But nonetheless, you still have a bearish engulfing candlestick, albeit with a long lower shadow and not a close below the T line yet. You can also see on this oscillator, we had that bearish divergence. So even though price was making new highs, this oscillator was just falling off there. So momentum was not confirming price. And that's always something you'd look for at a pivot or a trend change, right? Okay, now that won't be too long a video because I just went through pretty much everything relevant up until today on the last video. But we'll move on to the Dow Jones Industrial Average. Now, the Dow actually gave the best sell signal today of the 3 indices that I normally cover. And you can see a nice bearish engulfing candlestick, a close below the T line, and engulfing multiple prior candles, real bodies. So 1, 2, 3, 4, and let's see here. Is it 5? No, 4 prior candles, real bodies. Let's see. This one opened at 26,126. So where we opened today, 26,122. So almost engulfed 5 prior candlesticks, real bodies. But certainly, engulfing 4 of them and closing below the T line after such an extended move up here. That's a very strong sell signal. So the Dow showing the most bearish signal today. And also the Dow, as I mentioned in the last video, did not make a new high above this high here, but SPX and the NASDAQ composite did. So that's a nice non-confirmation, which those kinds of things typically happen at a trend change where one indice or 2 indices will not confirm the other or the other 2. In this case, the Dow was relatively weaker, did not confirm the S&P or the NASDAQ, and now the Dow had the strongest sell signal. So that's interesting. All right, so that's the Dow. Now on the NASDAQ composite, the NASDAQ composite was the strongest today in that it had the strongest bounce off the lows, but still it had a bearish engulfing candlestick. It did not close below the T line, but bearish engulfing nonetheless. So I think if everything starts rolling over here, this relative strength or relative weakness won't really matter, and they're all just going to start trending in the same direction as they were to the upside. But something to watch for, obviously this is just the first day, the first sign of a sell signal, although it's the first sell signal, a legitimate one that we've had in quite some time. So I thought it was worth pointing out. Now on the VIX, so the VIX certainly had a nice move today, although it gave a lot of it back. So we basically had this double bottom on the VIX, and that was at 1344 and then 1341, pretty much a double bottom. Then we had a big move up today, broke that initial high we had there, so made a it stopped this lower high pattern. It broke the lower high pattern, so that high was at 1617. Today we went as high as 1698, so just about 17. Obviously gave a lot of it back, only closed at 1463, but the VIX definitely wanted to show some life there. So we'll have to see how this materializes, but early signs that indices are reversing and VIX is reversing, obviously in the opposite directions there. Okay, speaking of VIX, that VIX VVIX tool finally gave something today. Okay, so I pointed out this out in the last video. VIX made a lower low, so a new low for VIX. VVIX did not, so VVIX made a higher low, so you had that divergence between VIX and VVIX. That's step 1 of the signal. Then today, you had VVIX get above the red moving average. That's step 2 of the signal. And then you had SPX get below the blue moving average. That was step 3 of the signal. Although I'll have to add a caveat to this. And just give me a moment here. Make that yellow. There you go. Okay, so that was step 3, getting below that blue moving average on SPX here. But we did come back up and basically closed at the moving average. So we'd want to see some immediate weakness starting tomorrow to embrace that this is a legitimate sell signal. And certainly looks pretty decent considering the candlestick sell signal that's been given off here. And, you know, the other technical divergences pointing out and everything else. So obviously very early, possibly the first day of a new trend. And you can't be too confident after just only one day. But certainly a nice sell signal. Definitely something to look for. Now I'll point something out on the futures. Upon that signal, I did... let's see here. I get to the futures chart. Okay, so this is the ES Futures S&P E-mini. What I did is I sold some futures short. I used the high of this candle, so the high of the move here at 28.1975 as my stop. So I actually put the stop in at 28.20. So that's just a quarter of a point above the actual high, and that's slightly higher than it made it on SPX. So SPX, the high was 28.1688. So the futures actually made a slightly higher high than that overnight. So that's why I'm using that as my stop. But pretty good risk-reward ratio. And just showing this as kind of risk-reward profile. So my entry, I believe I sold a few contracts short here at 27.90. Okay, so 27.90, that's the entry for the short. So obviously the stop loss at 28.20. So see the red section here is the risk. The green section is the potential reward. So even just a 382 retracement of this overall move up from the December lows obviously heavily favors reward over risk. So it's almost a 5 to 1 risk reward ratio, and that's just in the 382 retracement. Now, obviously, if we actually went down and touched the low or made new lows, the risk reward becomes extremely skewed in reward's favor, 15 to 1 or 14 to 1. But being conservative and just going for, a mild 382 retracement, corrective pullback, and a new bull move, if that's what's happening, still a very good risk reward ratio, selling short here with a relatively tight stop. So that's what I did. Upon further bearish confirmation, I could add to this position potentially, but I just opened a starter position today on that sell signal. Anyway, I just thought I'd bring that up, and we'll see what happens the rest of the week. Serial Trader signing off.